I'm delighted to be here today along with Mr. Rama Mohan Rao Amara, and we would be discussing digitization in the card segment. Mr. Rao doesn't need an introduction, but I'll give a brief introduction to him. He is the MD and CEO of SBI Cards, one of the largest credit card companies in India. Mr. Rao, the pandemic has disrupted many industries, including the card industry. We saw when the pandemic started, the entire spends in the card industry came down, and now they picked up quite handsomely. But there have been many other changes in the entire market. Can you share some insights with all of us in terms of what changes have really happened because of pandemic in the card industry?
Yeah, thank you, Ruchin, for the introduction. Very relevant topic. When I look at the way it has impacted the ongoing pandemic, already we are in the wave 3, but we are becoming wiser after each wave. So this has impacted the consumer behavior in different ways. Particularly, one aspect what we have seen, which has come out very prominently, is people have embraced digital payments in a very big way. We are seeing like the share of online spends. It has increased significantly. In fact, as of December 2021, when I look a year back, the share of online spends has increased by 2 percentage points to 53.8%, which seems to be like more like a secular in nature. Even in a normal situation, when the external situation improves, when there is no impact of pandemic also, once people taste the seamless experience and the convenience of using online, they are remaining there and they are resorting to the same online spends. I think in this connection, I have to acknowledge the role of e-commerce also, where in fact, the industry reports do indicate that like a tier 2 plus kind of towns are now contributing more to the e-commerce spends. And people have adopted the e-commerce because of the convenience. And of course, the pandemic situation definitely has forced. So one thing I have seen, at least from my own experience at credit card, SBI card, the spend category wise, we have seen the discretionary spends are coming back strongly. So particularly in the last December quarter, we have seen the discretionary spends increased by 34%. Particularly, some new category of spends are becoming very popular. Maybe it's the effect of pandemic, but health and wellness has become one sizable segment in terms of spends. We are seeing increased adoption of digital payments for utilities, then of course insurance kind of payments, education. These spend categories have emerged. So that way, the pandemic has created new opportunities. Particularly, we were able to come out with the right type of offerings to suit the changed customer preferences. Particularly, we have come out with a SBI Pulse, SBI Card Pulse, which is like which is very, very attractive for the younger generation who are conscious of maintaining their physique, wellness, etc. Because it comes loaded with a lot of good value proposition in that segment. Of course, we have an offering called Simply Click. This is for those people who want to get the benefit of accelerated reward points while spending online. So we positioned ourselves in the right way. Of course, we did focus on using the technology for digitizing every step of the customer journey for offering more convenience, because that has been the flavor and that has given us the efficiencies. So we did invest in technology, and it's a continuous journey. As you know, like there is nothing like we have reached a final stage or anything. We continue to look at making the right type of investments in the technology. But Ruchin, what do you see? What do you see in the industry?
So I think, Mr. Rao, you touched upon many different aspects, right? And I'll pick on a few of the themes. You talked about the acceleration towards, digital payments. And you rightly said, we're already seeing this, but the pandemic has really accelerated it. And, some people, ask the question, as the pandemic is, going away, will people come back to their earlier habits? Or, will this, be a secular shift? And, you did mention it's a secular shift. I think from the industry perspective, what we see is a couple of things. One is the digital payments have really exploded in India. And it is not just the UPI payments, which everybody talks about, but I think along with UPI, even the credit cards, debit cards, internet banking, IMPS, RTGS, all forms of digital payments have seen a massive explosion. So one question to you, Mr. Rao, how do you see this, this trend evolving? The roles of, big techs, people like Google Pay, Amazon Pay, or Phone Pay, how will that change the entire payment industry, and what impact will that have on the, specifically on the credit card side?
A very, very interesting question. And always I face this question from different stakeholders as to how the emerging landscape where fintechs are becoming very, very popular, whether they will unseat the traditional players or whether they will coexist with the traditional players. This question is always there. But when I look at the SBI card, we are a customer-centric organization, so we are always attuned to the dynamic needs of the customer. In that aspect, we always leverage technology to come out with innovative solutions and the right type of solutions, which will provide the right value proposition to the customer and great convenience also. So we have been part of several innovative solutions. If I talk about the kind of digitization what we have undertaken within the company, it covers the entire life cycle of the customer, starting from sourcing new customers to engaging with the customer, making marketing offers, then including the last leg, which is like a collections. So we digitized every step. Second thing is, of course, we have fine-tuned our risk-based algorithms in terms of adopting the adaptive machine language kind of methods, newer ways of working with the models, which gives more process efficiencies actually, which give more lift in terms of approval rate, etc. The second thing, of course, what we are focusing on is the hyper personalization, where we want to have the ability to offer a right service to the customer at a right time through a right channel at the relevant time. So in this journey, we are at a certain level of maturity. So we want to enhance this maturity and actually reach that capability of building a persona of each individual customer and customizing the offers to that customer. So that kind of capability. Of course, when it comes to like a partnering with the fintechs, are we simply avoiding the fintechs or anything? That's not the case. We are actually partnering with a lot of fintechs. We are part of a lot of payment apps like a Google Pay, GeoPay, Samsung Pay, etc., where credit card can also be linked as a payment, one of the payment instruments. So we believe, the entire industry believes actually it is for a greater good. Actually, there is a role and there is a space for everyone here to coexist and help the country towards the transition to the digital economy. Initially, perhaps the feeling was like they may not pose a potent threat or anything, but the reality is they have certain advantages. I'm talking about the fintechs and the big techs, but the combined strength, by collaborating with them, I think the consumer will be the beneficiary in terms of getting the right product and service.
Great. I think you summarized it, quite nicely, because my next follow-up question, you kind of preempted, but was supposed to be, the classic question: do you see fintechs as a competition, as a threat, or as an opportunity to collaborate? And you kind of said they are a mix of both.
I think now they are very conspicuous by their presence. They proved their utility. Particularly when you look at offerings like a BNPL, etc., they're so intuitive and they're very conveniently located in the customer's payment journey. This is a constant question we face, whether do we perceive any great threat from the BNPL, because that is a kind of substitute for the credit. So will that unseat the credit card? The classic reply what we always give is like a credit card itself is a BNPL product. It's like a buy now, pay later. Where you spend on the card, you avail a free credit period of 50 to 52 days with a choice of converting the spends into convenient EMI-based kind of loans. Credit card will have its unique value proposition, very compelling value proposition with a good loyalty program, with a lot of freebies. So it will continue to be appealing to younger generation as well as the other, established customer segments. So I feel like it has actually given a collateral benefit to us, to the credit card industry. Two aspects. One is like the BNPL is helping the new to the credit kind of customer segment to start availing microcredit, small credit, establish their track record, whereby they can become potentially add to the top of the funnel for the credit card, a regular full service credit card offering. That way, we look at it as a kind of opportunity. Second thing is within our portfolio, at least in SBI Card, we have seen our EMI-based loans. The share of the EMI-based loans have increased over a period of 1 year. When I compare December 20 and December 21, the share of EMI-based loans are increased by 4 percentage points from 29 to 33%. So it has a collateral benefit, and we are looking at it as an opportunity.
Historically, if you take credit card as a segment, it was largely confined to the big cities. People who are credit worthy. The top of the funnel. Expression that you used. Now, if you look at the masses, especially in small towns, where it was not historically, profitable to go there and issue a credit card. Is that changing now with the pandemic and with all the digitization and all the different innovative solutions you talked about? And can those people expect in the coming years a very different offering from the card industry?
Because tier one, we have seen intense competition among the existing players, and of course, even where the credit card industry itself is witnessing entry of new players, particularly with the help of fintechs and even the banks, which are shied away from entering the credit card industry. They are partnering with these fintechs, with using them as a front end, and then they are very much into the credit card industry. So obviously, what are the other areas to look at for the growth opportunity? It has to be tier two, and more so with the tier three and the tier four kind of towns. One strength for SBI Card is our partnership with SBI, the parent bank, which has an enormous customer base of almost like a 43 crore customer base. Even if you think like some 50% of them may not be eligible for credit cards because of their profile and because of they may not be having that kind of need, still a 20 crore customer base is there, of which we are able to just tap 5%. So that way, there is a long runway to grow. Why we feel like it is a strength for us as compared to other banks is like the extensive branch network of the parent bank, which can be leveraged in terms of sourcing the customers and even servicing those customers, smaller needs, whatever small requirements are there for these customers, without having our own establishment and own infra. It is possible for us to leverage that kind of bank infra and of course the customer base in identifying the right customer base, and then onboard them or give them a credit card at a lesser cost of acquisition. Ultimately, through the kind of pre-approved programs, we are able to identify and we are able to have a very good hit rate when we reach the customers in terms of carding them and actually engaging with them. So that is our unique strength. But I should also acknowledge the contribution of e-commerce, as I referred to it earlier, which has actually popularized the digital spends. And I mean, the way the pandemic has actually anyway created a kind of opportunity for people to move from cash to digital using UPI or using the platforms like BBPS, etc. I think there is a very good enabling environment now, both from the government by way of appropriate infra, promoting the digital spends, then of course a regulator with a very enabling kind of regulation. I think it's very, very conducive for the industry to grow. And definitely the products will have to be fine-tuned. It is not like a one-size-fits-all will work. The products have to be customized to suit the needs of the customers in tier 3, tier 4. But I think it's an exciting play, if you ask me, because you deal with a number of players and you deal with a number of industries also. How does the industry look to the Gen Z, this generation? What is the ways of engaging with them, and what is the kind of business model to be adopted? What kind of product offerings are required? What is your take on that?
I think Gen Z is very different from the older generations in many different aspects. I think point number one, they don't have necessarily a strong brand association, with, the traditional brands, which a lot of us do, right? For us, like for me, if I deal with SBI, when I intrinsically think about safety and trust, and for me, it's a big deal. But for a lot of Gen Z, I mean, that is not necessarily the most important factor. I think they are quite comfortable dealing with new age companies, newer brands, which don't have a track record. I think they are digitally native, right? And I think what that means is they've just grown up in an environment where they have not seen a physical world at all, many of them, right? And their expectation is that they don't differentiate between, say, an Amazon or an Uber, and a bank or a card company, because for them the experience is all digital, right? And they expect something very similar, and that's why you'll see when we see success of a player like Cred, right? Who just provides payments to credit cards, right? You can now, why do you need a credit? You can come and make payments to SBI Cards on the SBI Cards app, or SBI Cards website. But we've seen a plethora of fintechs come in purely because they provide a positioning, a brand, an image, and a service that's quite attractive, right? So it's a little bit of a gamification, giving some points, engaging with the customer. I think that for them, being digitally native is quite important. So companies who will be able to do it will take a big share away from them.
No, I think the pointers which I can take from this conversation as to how do I deal with Gen Z is perhaps there has to be some three critical elements will have to be there. Everything has to be has to revolve around mobile. It has to be a mobile-centric kind of engagement. Then the payment experience has to be seamless and frictionless. Then only they will look at any offering. So I think unless these basic ingredients are there, and unless the offerings are customized, because a segmented approach may not work, a very, very broad segmented approach. So unless the offering is like a customized, personalized, and offered at a relevant time, perhaps we may not be able to connect with Gen Z. So, but looking at the potential and the size, definitely it is a mouth-watering kind of opportunity.
I was just moving on, to another important aspect. Just coming to the economics. Now, credit card historically has been quite a profitable product if you get the credit underwriting right. Where fees have been quite high historically. Now, one of the things that you're seeing in the entire payments industry, especially led by UPI, is there's been a compression and sometimes almost zero fees in the entire payment industry. Now, do you see a threat either from regulations or just from customer behavior? That you will start seeing a squeeze on your margins on your fees going forward, and what are your plans to counter it?
I think two aspects. One is when it comes to regulation. I think whenever the MDR was revisited by the regulator, they did look at credit card, but we were let go for unique features like we take the credit risk, we give a free credit period, then loads and loads of reward points, etc. Loyalty, very rich loyalty program is there behind the credit card. So considering these things, they always treated credit cards as a separate segment, and also looking at the size of it. Ultimately, when we are looking at UPI versus a credit card, the unique customer base is still 37 million, 38 million kind of a unique customer base only, which is like a fraction of the overall population. So perhaps looking at the fact that it is still at a nascent stage, but still helping in terms of credit dispensation, it always got a separate dispensation. I'm sure like whenever there is an opportunity, whenever RBI comes up with a discussion paper, still I think there will be an opportunity for the card industry to present their case. But having said that, you touched upon very important aspect of profitability, fee, etc. So will it not attract newer players, and will it not actually squeeze the margins? Absolutely. I alluded to this point earlier. We are seeing a kind of very aggressive play from the existing players as well as the new players, of course, with the help of fintechs. I think it's a constant battle within the existing players as to how do they source the customers, what is the cost involved, how do they engage, how do they underwrite, how quick and agile they are in terms of changing their credit policies based on the red flags, etc., whatever they are seeing, and how efficiently they will collect the dues from the consumers or the customers, etc. I think if you ask me honestly, we are on our toes always. That is a kind of dynamic environment in which we are operating. The threat of substitutes, the threat of new players emerging, and of course, this expectation that maybe the regulation may tinker with the MDR.
Excellent. I think we've touched upon, a broad range of topics, starting from, the changes happening in the macroeconomy, the rise of digital payments, change in customer behavior, change in competition, the advent of fintechs, but also traditional players. You talked about many more players entering the card industry, the industry expanding from the tier one centric customer base to now tier two, and going forward tier three and even then tier four. I think a lot of these changes, you also said, are secular changes. They are not just temporary changes induced by pandemic. But even when the pandemic goes away, a lot of these things that pandemic taught us will probably stay with us.
It puts us in a thinking mode, and then it gives us an opportunity to connect with what is happening externally. So nice talking to you, Ruchin.